I'm on the floor tonight to talk about retirement security, something everybody cares about. Who doesn't want peace of mind in retirement? And when I'm back home, I hear about it all the time, partly because a lot of people are worried about the costs they're going to have in retirement, including long-term care costs. A lot of people are seeing their parents or grandparents living longer, healthier lives, and yet they don't have the retirement nest egg to be able to keep up. So we need to do something to help on that. Social Security is there. It's the safety net. It needs to always be there. But that's what it is, just a base amount. You know, $1,200 a month is not very much, which is the average for some folks in my home state of Ohio. So you got to have private retirement savings that adds to that. And that can be savings you have in your bank account. But the best way to do it is through a 401k account at your work, where the employer hopefully puts a match in. So it's a good deal for you because you put your money in, employer puts money in. You get to have a tax deduction for it. An IRA, even if you're not at work, you can take out an individual IRA. Same thing, you get a tax deduction. That's good. And then some companies have defined benefit plans. That's the old pension plans. Those are great if you have one. Not as many workers do anymore, but we want to preserve those that are left. If you're a federal government employee, you do have the federal employees pension plan, which works for them. All this together is incredibly important right now for the people I represent, and people are worried about it. Some of the statistics are actually pretty scary, that a lot of people that work for small businesses don't have access to a plan altogether. They just don't have any opportunity to get a retirement savings plan. About 50% of workers in these small businesses are in that category, as an example. So over time, we've tried to address some of these issues, and right now, fortunately, the United States Senate has a few bills that it could take up that actually help in that. I've been working on this issue for a number of years, actually about 20 years, going back to my days in the House. With now Senator Ben Cardin, we passed legislation to expand how much you can put into a retirement account, 401k, IRA, increase the amounts, but also the catch-up contributions some people are familiar with. Also what's called auto-enrollment, so companies automatically enroll you unless you choose not to enroll, which helps get the participation rate way up, about 75% up to 95%. So we've done some things that have helped. And because of that, I know that if you provide more incentives for retirement, it works, because it worked back in 2001. In fact, if you look at what's happened since then, total retirement savings have increased from about $11 trillion to about $29 trillion since 2001. And by the way, this means there's more resources available in our economy, because there's more savings, and savings is a good thing for investment. It leads to higher GDP, higher economic growth, greater access to capital for small businesses, and so on. So this has worked. And by the way, these retirement nest eggs have increased among every income quintile since 2001, when you adjusted for inflation, every quintile. So it's not just people at the higher end or even the middle, it's people who are low income, middle income, higher income have all benefited from this. But as I said, we've got a lot more to do, because even with that Social Security, which is the safety net, really tough to live on that, people are not saving enough through their private savings and their retirement plans. We need to finish the work that we started. We also need to fix some outdated regulations that just don't make sense in today's world. I'm chair of what's called the Subcommittee on Retirement in the Finance Committee, so we're working on these proposals on a bipartisan basis, and we're making some progress. I want to tell you about some of those bills now. One bill is one that's before the Senate right now, in the sense it's already passed the House. That's called the Secure Act. One is a larger bill that does more than the Secure Act, that has been introduced by Senator Cardin and myself. And then there is a small provision I want to mention tonight that has been introduced separately, also is in the Secure Act, that is an urgent thing to pass, because there are a bunch of people who are going to lose their retirement benefits unless we pass it very soon. So let me back up and give you some of the troubling facts about why we need to do something here. First of all, less than half of employees, again, at small businesses, that's with less than 50 workers, less than half of those workers have access to a plan. So the problem is really in our smaller businesses. We know that. Larger businesses all tend to have a 401k. Many have a defined contribution plan like a 401k. Others have a defined benefit plan like a pension. But they tend to have retirement options for workers, but many small businesses do not. Even when workers have access to a plan, still only 34% participate. So among small businesses, fewer plans than there should be, but also fewer people participating. Only 22% of part-time workers are in plans. Now, increasingly in our economy, people have part-time jobs and may have a few part-time jobs, but they don't have a retirement plan in any of them. By the way, when you look at this in terms of the folks who are not participating, low-income Americans also are not participating as you would want. 22% only of low-income families are participating in retirement plans. Many of them don't have the disposable income to be able to contribute. And we'll talk about that in a second, how to address that problem. And then the final problem I want to mention is not to do with the small businesses or part-time workers or low-income workers. It has to do with what we talked about at the beginning, which is people outliving their retirement. And let's face it, we're living longer and healthier lives as Americans. That's a good thing, but a lot of people didn't or couldn't plan for that. So they may have thought, I got a nice little nest egg here, I've got a 401k, I'm going to retire at age 65. When they're in their late 80s or 90s, they realize there just wasn't enough set aside. And so here's an opportunity for us to address that as well. Earlier this year, we introduced this legislation, Senator Cardin and myself. It's called the Retirement Security and Savings Act, and it addresses all of these problems that I mentioned. It has more than 50 reforms, actually, to help Americans achieve this goal of a safe, secure retirement, peace of mind after your working years, letting people retire with dignity. It has a few important provisions I want to mention tonight. I won't go into all 50, but mention some of them. First, to increase this low 22% coverage among low-income workers, it expands what's called the Saver's Credit. This has worked well, but it is not refundable now, meaning that for a lot of people who are low income, they can't take advantage of it. They don't have the income tax liability, particularly with the new tax bill, frankly, where a lot of people had lower taxes, and so they don't have the ability to take the deduction, but they can use a credit. So we changed the Saver's Credit to expand it so it's more usable. And we make it refundable, but not refundable to individuals, but refundable to a retirement account, because you don't want to just provide more funding out there that's not going to be used for this correct purpose of retirement. So it's got to go into your retirement account. In addition, it increases the credit amount available to a lot of low-income savers. So this is going to really help on getting people who, again, are working, but they're not saving, to be able to save for retirement. The bill also addresses the problem of only 22% of part-time workers being in a plan. It requires employers to allow part-time workers who have completed 2 years of service to participate in a 401k plan. This is a big deal to the AARP, as an example, one reason they're strongly supporting this bill. By the way, as well as a whole group of businesses and nonprofits and others, people love this bill because it's going to help people save for retirement. What's not to like there? But particularly with regard to part-time workers, saying if you've completed 2 years of service, you need to have access to a 401k plan. That's going to help. It also allows employers to make matching contributions to the 401k accounts of employees that are paying off student loans who otherwise wouldn't receive a full match. Why? Because they've got to choose between paying down the student loan debt they've got, and saving for retirement. I really like this idea. It's an innovative one. It was first proposed by Senator Ron Wyden, by the way, on the committee, the Finance Committee, the ranking Democrat. But I think this will really help with, again, people who are coming into the workforce. They got these student loans, so they got to pay off that debt. They can't afford to put money against 401ks. This enables them to put that money into the match and to help be able to get them started on retirement. In Ohio, by the way, on average, the student debt now for someone coming out of one of our four-year colleges or universities is $27,000. That's tough for a lot of people to get started in life. To get at this problem, we talked about a few small businesses having plans. Portman Cardin increases the tax credit that small businesses receive for starting a retirement plan. It's $500 now. We take it up to $5,000. That's a tenfold increase. That will really help small businesses, we're told. This is why they support the bill. It also provides an innovative tax credit idea. Small businesses will get a tax credit who automatically enroll their employees in the plan at least every 3 years. What does this mean? We talked about auto-enrollment earlier, that if you have auto-enrollment in your company, your participation rate goes up to 95% from about 75%. Why? Because people come into the workforce, They might not sign up for the 401k, but if they're automatically signed up, they're not going to say no, right? So they start to get a little of that payroll tax and a little of their paycheck going toward retirement. And by the way, they find out this works, start a nest egg, and they like it, and they stick with it. Same thing here. If at least every 3 years you have to automatically enroll your employees, what happens? You get people into these plans, and they stay in these plans. We think this is going to be a big deal in small businesses, and we think it's worth giving them a tax credit for it, kind of an innovative idea. And for small businesses, our bill also reduces some of the burdensome and duplicative regulations that are associated with administering a plan. Because for a lot of small businesses, they don't have a lawyer or general counsel. They don't have a professional who can help on this. But the HR person would sure like to have the ease of administration of these plans. So we do that, which is important to get more of these small businesses offering these plans. The problem we have talked about with Americans living longer and healthier lives and being in danger, therefore, of outliving their retirement, we also address. And for those who follow this closely, because you're getting close to retirement, pay attention here, because this could be helpful. To help folks who have accumulated retirement savings preserve those nest eggs, to help preserve your hard-earned nest egg, the bill actually changes what's called the minimum distribution rules. If you're in your late 60s or maybe turning 70, you may be shocked to have just found out that, guess what, that 401k that you've got or the IRA that you've got to start distributing money out of it under what's called the minimum required distribution rules. My dad was a little surprised by that because he was still working at age 70 and a half when you have to start doing that. By the way, a lot of people back home are still working at age 70 and a half. And they want to keep their retirement nest egg there, and they want to keep building it up because, they hope they're going to live a long life, and they want to make sure they have something in there. But instead, no, when you're 70 and a half, you got to start taking it out and paying taxes on it. So we changed that from 70 and a half to 75. We do it over a few years because it's an expensive provision, frankly, in this bill, but we pay for it through other means. But the idea is you want to let people keep that money in their nest egg. And by the way, if your nest egg is $100,000 or less, there's no minimum required distribution anymore under our bill. So for people that, again, are 70 and a half and are wondering, why do I have to start taking this money out? I've got $65,000 that I've saved up all these years, and I'm still working, or I don't need to take it out for retirement. Let them keep it in that plan. If you're under $100,000 in your account, keep it in going forward forever. If you have more than $100,000 in there, then for that additional amount, you don't have to start taking it out until you're 75 under our bill. So this is going to really help for people to ensure that they can set aside money for retirement, and they know it's going to be there when they need it. Our new Portman-Cardin retirement legislation has the potential to fundamentally reshape for the better how large numbers of Americans approach their retirement planning. And that's a good thing. And I look forward to getting it passed through the Finance Committee and sent to a floor, this Senate floor, for a vote. As I said earlier, even before we can get this broader package done, we've got a smaller bill that's sitting here in the Senate. It's already passed the House. It's called the Secure Act. It actually passed the House almost unanimously, 417 to 3. That rarely happens. And that shows you the kind of bipartisan support it has. It's not as comprehensive as the bill I just talked about, but it does have some good provisions. It has that increase in the small employer tax credit, for instance, we talked about. It also raises this minimum required distribution to age 72, from 70 and a half to 72, which is good. It doesn't go to 75, and it doesn't have the $100,000 improvement that we've got, but it does help. It also helps long-term part-time workers contribute to 401ks, which is good. So, we go further in our bill, but this Secure Act is a good step in the right direction. I support it. I support bringing it up and passing it. It already passed the House. I do think that we ought to allow a couple of amendments on each side, because this Secure Act that passed the House has not been voted on this floor before. It came out of our committee back in 2016, I believe, so it's been a while. There hasn't been any debate on it or deliberation. Why not allow a few amendments on it, on each side? Democrats probably have a few amendments they'd like to offer. Republicans have a few they'd like to offer. But the point is, let's get that bill up and get it passed. Then there's this final bill I was talking about. It's part of the Secure Act, which is on the floor right now, ready to go. It's also been introduced separately. And this is to address an urgent problem right now that's affecting over 450,000 Americans. Now, it gets a little complicated here, as retirement plans do sometimes, but these are people who are in these defined benefit plans, the pension plans. And they are in businesses that have shifted from a defined pension plan, a defined benefit plan, to a defined contribution plan like a 401k. These are businesses that we're not going to have the traditional pension anymore. We're going to go to a 401k where individuals contribute and individuals control their account. Now, what happened in some of these businesses is they said, but if you're already in a defined benefit plan, you can stay in it. We're going to freeze your plan going forward so new employees can't go into it, but you can stay in your plan. And I think that's fair. Let people who are in the plan, who paid in all these years, continue to stay in that defined benefit plan as they retire. The problem is that inadvertently, the rules with regard to pensions are tripping these people up because there's something called the non-discrimination income testing. In other words, you can't have too many of the benefits go in a defined benefit plan to people who are more on the high-end income. It has to be spread out. Well, think about it. The people that are left in these plans are people who are older because the new employees have had to go to the defined contribution plan. So it's an older group of employees and therefore more highly compensated because they've been given raises over time. So they trigger this non-discrimination income testing and they lose their benefits. They can't continue to accrue benefits. That's just wrong. These are people who have played by the rules, done everything right through no fault of their own, but through this quirky regulation, which was never meant to address this kind of an issue. They're facing the very real possibility, 150,000 plus people, that they're going to lose their benefits through no fault of their own. They should be able to continue to accrue benefits and get this retirement plan that they have worked so hard to be able to enjoy. Nobody really disagrees. Again, it's in the Secure Act. We've introduced it separately. Around here, you run what's called a hotline with your fellow senators to see, does anybody object to this if it's a non-controversial piece of legislation? So we did that with this. And guess what? This legislation was approved by everybody on the Republican side. Nobody had a problem with it. Again, it's just a question of being sure that these flawed rules aren't inadvertently hurting these 450,000 Americans. And then we ran the hotline on the Democratic side, and it was also very popular over there, but at least one person objected. Maybe more, but at least one. And so we're trying to work on this together to try to get it done. And we found out the objection is not based on the legislation at all. No one has any problem with the legislation. It's based on their interest in not allowing anything that's in the Secure Act to be done separately because they want to be sure the Secure Act gets done. I want to be sure the Secure Act gets done too. It's an important bill. It's a first step in the right direction, as we said. But let's not take it out on these employees. If we don't fix it, then by this year end, like in the next couple months here, these people are going to lose their benefits. So my hope is that now that we have tested the waters and found out that it's not controversial among my colleagues, let's just bring it up under unanimous consent, get it done, and then let's move on and do the Secure Act too. So my hope is that we'll be able to do that. It's been introduced again as a standalone bill, so it's not like it's the other parts of the Secure Act that are only in the Secure Act. It's standalone, so it shouldn't violate anybody's sense of fairness to say, let's deal with this separately and get it done. I want to thank Chairman Chuck Grassley and Ranking Member Wyden for helping on this because they've been supportive of the Secure Act, they've been supportive of dealing with this quirk in the law that deals with these 450,000 people that otherwise lose their benefits, and they've been supportive of us doing this broader retirement savings package as well. I hope we can get them done. Let's do it in order. Number one, let's get the Retirement Security Preservation Act done. That's the 450,000 people. And let's just do that by unanimous consent. Everybody agrees to it. Let's move to the Secure Act, get that done. Again, that was passed in the House almost unanimously. And then let's move on to this broader Portman-Cardin legislation we talked about tonight. It really deals with these issues of small business coverage, deals with the issue of low-income workers needing to save more, deals with the issue of part-time workers having to save more, deals with this issue of being sure that people aren't outliving their retirement savings. Again, of the 50-plus provisions in there, there's a lot that really helps the people I represent back in Ohio and folks all around the country. They deserve us here in Congress to be focused on these kinds of issues. This is exactly what people expect us to do here. Help them ensure they have peace of mind in their retirement, and we're doing all we can to provide the incentives to make that happen. Thank you, Mr. President. I yield back my time.